All right, so this is going to be a bit of a think piece here today after speaking with lots of investors, both professional, financial advisors, and a lot of retail investors. I've been giving a lot of thought as to why do we see this like record amount of bearishness right now. What I'm speaking to specifically is the following chart where, and you've probably heard this on TV and other places, where if you look at the AAII survey, we currently have, nearly 60% bearish sentiment votes. If you look at the historical averages down here, you can see it's closer to like sort of 30, 31-ish percent. And the 1 year bearish high over the past 12 months has literally just happened just now, about a month ago or so. And so you have to ask yourself, how is that possible? And a lot of what I'm hearing is, well, it doesn't make any sense because all that the S&P 500 did is drop, a minuscule 10%. And here is really what I strongly sense, and I've been sensing this now for 9 months. And again, we talk to a lot of investors, a lot of retail investors as well, every single day. And it's very, very clear, it's crystal clear to me what's really going on. And so I just want to shed some light onto what we really see happening. How is it possible that after literally, and this is the other side of it, how is it possible that literally after like in late December, I think this was, where you can see consumers were basically record bullish, right? And record allocated to stocks, all of a sudden they're so bearish, right? So how that seems like a contradiction. So what you hear a lot of people talk about is that it has to do with so many people in the stock market, right? And because there's so many people in the stock market, there is this wealth effect, and I very much agree with that. So many people are in the stock market. We see it every single day. People that I can tell are brand new to this. And there's a crazy amount of wealth that, relatively speaking, gets quote unquote destroyed when you have as little as a 10% correction in the S&P 500. I would, however, say, and that weighs on sentiment, right? So all of a sudden, they basically value their net worth by the value of their home, which are to some cases getting a bit coming down. And then, of course, their portfolios, which are now, remember, for a lot of people, their portfolios haven't done anything since basically last summer because they're all long NVIDIA and those Max 7 stocks, which have done zero, zilch, nothing, zero since last May now at this point, right? So they're getting a bit impatient. However, and here's the bigger thing about all this, and this is, I think, what I have yet to hear anyone actually talk about. And I'm going to just bring back this chart here. So what I strongly sense is the case here, move my camera, is that, yes, we have the wealth effect because so many people are in the stock market. But here's the big thing. Because of so many people are in the stock market, and so devoted to that, they're so extremely nervous to any movement in the market, right? So that's the sentiment part of it, sort of like the second derivative of it. Yes, they have a wealth effect, but because so many people are in the market, and I see, again, a lot of people that really, honestly, quite frankly, shouldn't be in the market, and I mean this respectfully, are in the market. And social media, right? Everyone's got their favorite app. I keep talking about, these Robinhood kind of apps, and there's nothing against Robinhood, but they gamify the profession of investing and trading. And I guarantee you that's going to blow up. It's more a question of when, not if. But with that amount of people doing that many people doing highly speculative things, it takes and a lot of these people, by the way, with very little experience, it takes very little in terms of market movements for sentiment to swing dramatically. And that, by the way, and this is the punchline, doesn't have to, and ultimately it will for sure, but it can turn into a much worse drawdown or a market that doesn't rebound, because when that ends up happening is because those people are so dedicated to their value, and they literally decide whether they're going to have dinner or go on a cruise next week or whatever based on their portfolio. Again, I see this. We're not making this up. I can see this. We see it every single day. That when the market doesn't rebound immediately back in V-shaped reversals, which we've had now for 15 years, which is not normal, by the way. That ultimately, is on sentiment. And again, don't underestimate how many people are brand new to the markets. And when I say brand new, inside of 10 years. Why is that brand new? 10 years is a long time. I agree. 10 years, never seen a cycle. We've had one cycle for the past actually 13 years, and that is one raging secular bull market. So unless one has seen multiple turns, there's really not much experience. Keep that in mind. Hopefully this is helpful. Would love to hear from you guys how you feel the market as well down below. See you in the next video.